Hello, welcome to Mentor Club. Andy Tanner here. I'm joined by Noah Davidson. Noah, how are you this fine circuit breaker morning?
Well, I'm feeling better than many. I can't say I'm
Ha!
not fantastic. I'm pretty close. I'm
I'm
feeling pretty
feeling
good.
feeling better than Ed. That's pretty awesome. So pretty good stuff. Um, really a heck of a market right now. Just a heck of a market that's going to be
Yeah.
fun to talk about. These are probably among the most important mentor clubs that we do, and all that good stuff. So it should be a good time here. Let's see. I think I need to go like this and like this. Do I? Yes, I do. Fantastic. Let's do our disclaimer. We do this for training and education purposes. We don't give advice. As always, we don't give warranties on the trades we make. We don't mess with claims. We don't keep track of how students do. None of that stuff. This is just about learning. That's it. And so that's the expectation is learning. That's it. All investing involves risk, and that's particularly true today for sure. So any decision makes played is for grown-ups, basically, is what that says. So let's look at this. The one that is the most fun for me to talk about is we're down 10 grand in KHC. And in the past, in the Meta Club, I have not advocated that we have what we call a core position until this last year, or any core positions. We'll probably add some more to these. And the
Yep.
reason and boy, case in point, the reason I think it's important is how much do we have? How many shares do we have of this
We got
stuff?
1,500
Shares.
shares and a bunch of
Yeah.
naked calls and I bought some puts that haven't really performed like I'd hoped.
Yeah.
So,
Well, the thing about, let's just start with KHC. When you look at this right here, whoop, that's Lululemon, that's not KHC. So when you look at this right here, boy, look at that support right there, dude. This has been meandering in this for a long, long time. What's really interesting on a day like today, with the volatility of the market last week, this actually went up. So people saw this as almost as a flight to safety. It's going to pay us a dividend of 1,500 times 40, so we're going to get about 500 bucks out of that. Not quite 500 bucks out of that, but this is a position we're going to hang on to, Warren Buffett way, and we're going to try and chip away at what's called the cost basis. So we probably brought it up here in the 30s. And so the reason that looks like it's hurting us pretty bad is because it is. And so the lesson there is investor temperament on core positions. And the
well,
question is,
I got to tell you, Andy, I really had to fight my trader instinct to dump it. Because,
really,
and
I'm
yeah,
glad you
well, I
did.
did. Well, no, I didn't want to, and I wasn't planning on it, but it just like, every little, and I tried to manage it as best I could. I did little things like rolled the calls down and bought some puts. But this is an experiment for me in learning this temperament better because it's something in my own trading and investing that I really want to do more of. Um,
For sure. Well, you figure this, I loved Buffett's. Scott, I'm sorry, I've still got a little flu hanging on from last week. But Buffett has lost a lot more money in this than we have, for sure. Imagine Buffett's temperament going back to here. And I'm not advocating buy and hold. That's not what I'm advocating is buy and hold. Let me go. Where's 3 years of this? There's that's what it looks like if you're Warren Buffett, right? And he's got, a zillion shares of this stuff. I think he owns probably 5% of the whole company or some ridiculous amount. So, that's what he's had to deal with. So for him, this is stabilized. And if we go back and look at, where's the daily? Can I bring in any more time on this? Probably not. Let's go here and let's go time frame and let's go 2 years. There we go. So this is where it got my attention, was in this gap. So I actually saw this as an opportunity. And in my own personal account in trading, I started writing puts on this to acquire it. And we acquired our first bit right down in this dip right here is where we acquired the first bit. And then we've written puts and calls on it since. and I'd like to acquire some more even down here where it is here. So, it's at the low that it's been, but it hasn't been too bad, since this big drop. It's just kind of meandered around. And Warren Buffett put out his yearly letter for Berkshire Hathaway, and then he got interviewed by CNBC, and it was really a frustrating interview because the market was down about 900 points or something like that in the Dow, and it was kind of at the beginning. It was the first really nasty day of this coronavirus stuff, and she kept saying, what should investors do? What should investors do? What should investors do? Is this blah 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 blah? As if he had a crystal ball. And he says, look, and he just kept saying over and over and over, and he was very patient with her, almost because he just understands that it's so hard for people to get this. He says, look, we don't look at the day-to-day fluctuations in the stock price. We're buying a business. And a great way to look at this is this stock right here. Let me just bring this up like this. I do this all the time, so you guys can have a little forgiveness for me when I do this. But this stock right here is a business, and it turns its crank, and it cranks out cash like this, right? Cash comes out. And so it's going to crank out 40 cents a share, every quarter. So over a year, that's $1.60. And the idea isn't so much whether the price tag on this machine goes up or goes down, day to day. It's that our cost basis goes down. There's a big difference between that. In other words, look, how much did we pay to get this $1.60 in cash flow? Well, right now, I mean, this is a freaking bargain, if you ask me. So let's walk through this trade. This is why we're going to leave it in there. Is if we go to dividend.com, Noah,
Mm-hmm.
and we come over here and we say, let's look at KHC at this price and say, what's their dividend going to be? Because they're still in a position to give it out dividends. So 70% of their money gets paid out as a dividend. So they got a ceiling of 30%. Okay, look at that dividend yield right now. Look at that dividend yield. Now, contrast that to a 10-year treasury right now. Okay, to a 10-year treasury. Well, let's just go CNBC. That's the best way to get it. CNBC, stocks, markets, bonds. Okay, there you go. Now look at the 10-year treasury right here, Noah. Look at what you're getting on the 10-year treasury.
0.524.
0.524. So you can stick your money in a 10-year treasury for 10 years, or you can get that on your money. Now, here's what's really interesting is, let's say that you write a call on this every month, and you write it out of the money a bit every month. So let's say that your dividend on this is 6.15%, and that's at a price of $26, right? Or whatever it is. That's $26, and that's going to go down, by the way, in a minute. That's going to go down further and further. So you chip away at your cost basis. So we really don't care what the price of this Jack in the Box is, and neither is Warren. The question is for this cash flow, for this payout ratio they're giving, for this $1.60 every year, how much do we pay for that? And our cost, or my cost basis in my account, is getting lower now than what this chart shows. In other words, my cost basis in my account is way below this $25, $24, and I'll be into the teens soon. Why? Because I've been writing options on this, cutting down my cost basis over and over and over and over and over again, and my Jack in the Box. So even though, in our account, we picked this up probably in the 30s,
Oh, like 32 is where we started, and
Yeah,
we do have a couple of dollars off of the cost base, and I'm actually looking forward to picking up more at these lower prices. So
yeah. I mean,
we'll get the cost base down.
yeah, we will, and over time. And so here's the big question. I wouldn't do this with Tesla because I don't know Tesla's business. I don't know if people are going to be buying Teslas and if they're going to make it they're a new company and they're a high flyer right now and all this. I feel tremendously confident that my grandchildren, if I get any, I probably won't have any in the next 10 years, but I think my grandchildren are going to go into a restaurant and get their little hamburger, and there's going to be Heinz ketchup on that table in that restaurant because there are just certain brands. Like, no one really cares what kind of green beans they buy. Oh, I need to have that Del Monte. No one, they green beans. But there are certain brands that people care about, and they might invent a million colas between now and then. But I'll tell you, Coke has kind of got that thing by the neck. You got Coke and Pepsi, and those are your colas, right? That's your deal. And that's kind of how a lot of these Kraft Heinz brands are. Oscar Mayer wieners are going to be there. Philadelphia cream cheese is going to be there. Kraft macaroni and cheese is a staple for a kid's, youth lunch or whatever. So you look at this low price and that dividend yield, at this price, and right now it's even lower. In fact, I mean, to me, it's a bargain.
Oh, it is a bargain.
What's
I
it,
think we
what's it,
should
tra- what's it trading at right now?
24, 25,
20,
23.
what does it say right now? We'll call it 24. So if we call it 24, $1.60 divided by $24 is 6.6. I mean, you're upwards, you're rounding up to 7 um, to get a hold of Kraft Heinz. And the thing of it is their income is good and they have enough room to pay that dividend out, as Buffett pointed out in his Berkshire comments. What's not to like about that company? The only thing that's not to like about the company, to answer that question, is their debt. And if they reduce their dividend, could they pay down that debt faster? Yes, but they're on a great payment schedule. They've cut out a lot of fat of their business. They've done a lot of good things, and we're the reason we're holding KHC is because we feel this is a good business. Now, with 1,500 shares, we're going to have to look at let's take a look at this a little bit. With 1,500 shares, we bought this at 30. Is that what we bought it at?
That's the price we own it at. Yep.
So it's got to climb $6, right? It's got to climb to here for us to do well. But watch this. Now look at this. We've got 44 cents. There's some protection. But we've got 44 cents, 35 cents, and 25 cents subtracted by 54 cents. So let's just do the math on that since I can't add up all that in my freaking head. So we got 55 cents well, let's do it this way. We've got 25 cents plus we've got 35 cents plus we've got 44 cents minus 54 cents. Okay, so a net of 50 cents. So we get to take that 30 and turn it into 29.5 basically. And then we can take it from 29.5 to 28, and then from 28.5 to 27, and then 26.5, and all the way. And over time, we'll chip away at this to where the premiums pay for the stock, to where now we have an asset that we can hold forever that'll pay us. And what's really cool is we can begin to write options outside of the standard deviation further and further, because if this stock does get back to these high prices, the premiums are going to be much, much richer at 70 than they are at 30. They'll be double, which means you can go further out of the money to get them and just continue to reduce your cost basis. So that's what we're doing with that. And it takes a lot of temperament to say, okay, to see this, oh, I'm down $9,000, pretty much everything else in the portfolio is fantastic, right?
Yeah.
Everything else looks good. I mean, now Disney is down a little bit.
Well, I've got that collar to prevent it from getting worse, and I'm looking at Disney kind of in the same type of fashion. I'm working on the cost base and may pick up some more. Yeah, I mean, with the market moving down as fast as it has, it's taken me a little bit of time and effort to try to manage the downside. And it hasn't been
Yeah,
perfect. They're taking a haircut on a few things, but then with the hedges I put on, we came out, pretty even, Steven. And the fact that the market was down, they had the market went limit down overnight. Circuit breakers went off, and so they
yeah,
actually shut down the futures overnight. And then they shut them down again this morning for 15 minutes. And then the market's been up since that, since the
yeah.
circuit breaker went off this morning. But the fact that we're pretty close to break even after the market's, tumbled down as far as it has, I feel pretty good about.
Well,
Um, yeah,
and we're not going to be break even until our KHC turns positive. But see, that's a business, not a stock.
right.
That's the way you want to look at that. That's a business, not a stock. We're going to live with some fluctuations with that, and we're not going to sell it. In fact, people say, well, don't you always have a stop loss? Well, no, we're going to do what Noah did. We're going to buy puts if we feel that we want to insure that position for a little bit, right? So
Yep.
we've got quite a few puts in here, and we'll spend a little money, to protect that, right? And see if
When
we
I
can
can buy a
grab.
few more, or with the volatility where it's at, maybe some put debits. But I also want to sell more puts to acquire more. So
Yeah.
I'm going to
I
work on getting I'm just waiting for a good signal to acquire more.
What's interesting about this chart is how it stabilized at the bottom here, especially last week. I mean, that's not a massive gap down on a market that's gapped down much, much more. This is really a good sign to me. Is if you look at this, last week where I guess we could superimpose an S&P over the top of this, or side by side to it, really. When you look at what the S&P has looked like during the last few days, we go from April here to the present. Let's just do that. April to the present. You know, you look at what has happened here in this bit and what has happened here in the same amount of time. It's not even close. This has been resilient in a market that has been pretty rough. So even if this thing falls down here, as long as they're not cutting this dividend too deep or too permanently, I really like where we are in it, right?
Yep. Yep.
Because
Absolutely.
we're still going to collect our rent, so to speak. We're still going to collect our rent. So it's exciting stuff. So there you go. And there's bargains to be had.
There are, and the question is, where. And so we've got. Oh, hey, check it out. I've been short Delta since we had our conversation about shorting airlines, and that was, pretty spot on call. Um, got a nice little, P&L going on that, and I think, but I do think it'll be a good one to pick up after this settles down.
That's
Um,
so we were short on the way down. Let's look at this. So we were short on the way down shares. I guess we could look at it this way. Do we have any stock, or did we just?
Nope,
Oh, we
just
just got a.
I sold a bear call spread. I
Yeah,
bought a put
yeah,
spread, and I've got a risk-free put spread, and then I bought some other puts.
yeah.
So we got
When
a
the
bearish
dust
position on
settles,
it.
when the dust settles, wouldn't it be nice to pick that up around in here or around in here when the dust settles? I mean, if you're an airline, you're hurting because you're going to be canceling flights. But I'll tell you, the flights that you are flying, your oil's gotten pretty cheap.
Oh yeah, the price of oil overnight dropped down
20%.
crazy over the weekend. Yeah, it's down 20-30% on the
The,
weekend.
the Russians can't seem to get along with OPEC, and OPEC has kind of done a 180. And that price war of oil. We remember when we used to trade the the USO about
Uh-huh.
3-4 years ago when it was like this.
Yeah.
We're kind of back at those levels again.
It's
So
definitely at
that's
a low price. So, maybe we'll see some, relief at the pump. But yeah, it dropped from like 40 down to 30. It opened near 32 on the futures. And so what's it trading at now? 33.
yeah, it's way
Yeah.
excuse me, it's way down there. And if you look at this on let's go out a little bit here. Remember when maybe it was back here 4 or 5 years ago. This is where we were
Yep.
trading the USO. Remember that, where we just felt oil wasn't going to stay down there that far, that long? Well, here we are. Isn't it interesting how these things drop to these types of levels? OPEC controls this. This is almost the same thing they were doing in 2016. It was kind of them and what they're doing. So that's going to be an interesting chart to watch, is how much further can they take oil down? They make it so cheap over there.
Well, yeah. And, U.S. has become the largest exporter of oil, like net producer, but it's all shale oil, which costs
It's
more to
fracked.
produce.
Yep.
Yep. So, these low prices will cause a lot of the smaller fracking outfits to probably shut off
Shut
the
down.
pumps.
Yep. It's just like
Um,
Delta Airlines. I mean, they're not going to reduce the prices and sell airline tickets for less. There's not going to be like all these bargains to get people to fly. They'll just quit flying. They'll just stop flying. They'll just cut flights. And
yep.
it's the same thing. Rather than sell oil cheaper, they'll just cut production, which is a tool that a business has. Now, when you conduct production, you cut income. But if you're going to, why sell oil at a loss? Same thing. Why take a flight at a loss? It's better just to shut production than take a loss, right? No money
Yeah.
is better than losing money. So it's
Yep.
going to be
So,
interesting. So any highlights that we want to talk about? Anything you want to?
I think worth talking about probably the thing that I've got going on a few of these that I feel is worth noting is collaring trades. If you own stock and you're worried about the risk, you can put a collar on it. So I've got a couple of them. Like,
Sorry
oh,
for the coughing in your ear so
oh
much.
no
Still
problem.
getting
Let's
over
see if
this flu.
I've got a couple of these are collared. And I think I can take over the drawing tool there, or
Cursor.
if memory serves, I've got AT&T collared, and I actually have a couple extra calls on. I left the covered calls on that I wrote, but I went and I sold the $36 calls, which paid for the $35 puts. And so as far as risk goes, look at the net delta. We own 300 shares of
Almost
AT&T, but
negligible.
look, it's neutral.
Yeah.
So we've got that down. And then I did the same thing on Disney, where we sold, owned 200 shares, and I went and I sold May calls. I rolled them down and out, and then I bought these April puts. So this is a little bit of a spread. They're not the exact same price, but I've got the call and the put, and that's brought the delta down, and it's basically kind of locked that in because I wasn't sure how much further down the stock was going to go, and that's after I rolled some calls down and locked in the profits on the calls down. Very very similar, I think, situation here on Lulu. I was trying to get it collared this morning, and I ended up canceling because I wanted to roll this one. So we got a covered call that's pretty close to max profit, I believe. And I was thinking of collaring that because I wasn't sure which way this market was going to go. It may rally, so that's probably my biggest. Want to wait on the take a look at the chart, and stock price is down here, but it's got a little hammer. And after
Bottom.
after they did the
Top to
circuit
bottom.
breaker this morning, I'm wondering if we're going to get some action out of the Feds or out of Europe or Japan where they do
Well,
rate cuts.
the watch the Fed tool that
Yeah,
excuse me, that guesses they think it's going to be a 75-point cut.
yeah. So, and that's that'll probably prop things up in the near term. I think, and I think the potential fear contagion could be something that drives the market lower. But if we
Yeah.
wanted to batten down those hatches, we've got
Right.
we're still in a nice little profitable situation, but our call on this, we've given up some of our gains. We've got room on the call, and I was thinking about collaring it, but just leaving that short call on since it's clear out at 220, which is out, out above, this right out here. So I've already rolled those calls down once.
A collar is a
So we got,
fantastic defensive strategy
yeah.
because it takes some of your profit and buys insurance with profit from calls, and what
Well,
uses
that would just be it right here. Like we could take the profit from the call. We're up $800-900 on the call, and if we wanted to reduce the risk, I can go to that same month and just buy an appropriate amount of insurance. So it could go, we could go pick up these 185 puts right here. Probably get those for near what maybe we'd have to go to the 180s to get the bid ask spread to work out. And that's probably the only thing that's holding me up right now is getting that filled. We're dealing with really wide bid ask spreads on options across the board. The volatility index shot up over the last week, and we've had some big volatility here. Now it's the VIX reading at today, 55, 56. That's a pretty high number for the VIX. So options are expensive, and collaring is a good way to go because the puts get pretty expensive. But the calls also get expensive, not as expensive as the puts, but they get expensive. And another thing we could do is we could do put debit spreads on that's one way to offset the bid ask spreads. But with the market this morning, I mean, just kind of put this into play. Let me just kind of show how that little circuit breaker worked. Let me drop this down like a 1 minute chart. Let's go 15-minute chart. And so overnight, Andy, right when you and I talked last night, that's right when they shut down the futures exchange.
And
So all these little
for just a second, and then it was
yep,
off for the rest of the
all
night.
those little dotted lines, it was off until the open. And then let me drop it down to a 1 minute chart here so you can see how it played out. And let's get in here. They shut the exchange down for about 15 minutes this morning, right at the opening bell.
Yeah.
And then it opened up down, and then boom, it's been running up and filling a little bit of that gap since. And again, the circuit breakers are set. They were set at 7%. There's another one at 13%, 20%.
If it hits the 20, they'll close the market for the rest of
They'll close the exchange. Yeah. So there are protections, and those things are designed to let traders go home and think about it, sleep it off, make sure that the panics is under control. And I last time we saw a limit down circuit breaker was election night of 2016.
I remember that.
It shot down, and then it shot right back
what
up.
We've seen here. Did exactly what we've seen right here. So that circuit breaker did what it was supposed to do, I guess.
Yeah.
Excuse me.
But yeah, it's been an interesting week, interesting morning, and again, it's been a challenging market for sure. And getting orders filled has been a little bit more difficult because bid ask spreads are wider on those options and things in it. And it's also wouldn't be for like the short term trading, like swing trading and stuff that I normally like to do. Not very effective in this environment. Day traders will do okay because they can take advantage of the volatility. And longer term position traders, you can hold and protect and do things. But swing trading for now, I'd say is less effective, and I've just been trying to wind down the portfolio. I did reduce the overall number of positions, but I wasn't able to get, I left stuff on that I felt pretty good about, and I left a lot of like naked calls and things on. Like I unwrapped the put side and left the call side on stuff. Like on the rep, for example, we have just the call side. I ended up pulling off the puts, breaking legs. Yep. And we actually came out really good after I broke the legs and the market tanked again late last week. We came out like bandits on the Russell with the long puts. And between the hedges I did on the S&P and breaking the legs on the Russell, managed most of the damage. But then we took big hits on like SPGI. That one I still got just the calls on. But that one was a big expense trade. Couple of others, took big haircuts on, and this has been a pretty rough trading environment. So for folks who are brand new, probably the best place to watch this is from the sidelines, and even those of us with experience, this is not. Go home. You can take your ball, just stay.
I very much batten down the hatches on a lot of my personal stuff. I actually looked at Delta opportunistically, and I actually sold some. Decided, okay, it's fallen far enough now for my liking, so I sold some. There was some really rich premium on some Delta Airlines in the low 30s. So if I can pick up Delta another $10 cheaper than it is today, if it gets there, I'll do it. And I decided to.
Yeah.
Those premiums
Well,
are so rich right now with the VIX being high, and they
I
might
did
get richer.
I did a similar thing on ExxonMobil, Andy. This was kind of a fun one. I went and sold 535 puts after talking with you about those put premiums. But
Yeah,
in doing it, I bought I bought 5 April 49 puts, and I
those have done
bought
well.
puts. Yeah, I bought puts just in case it dropped because I was worried that those naked puts were,
Yeah,
and I knew that they were having the OPEC meeting and I knew that the oil was going to be in play. I just didn't know it was going to drop 30% over the weekend.
yeah.
So ExxonMobil, dropped down, but I
Let's
actually
look.
have
Let's look at it.
yeah, because this is another one that's got monster premiums, Andy,
Yeah,
and it's got, that's got that really fat dividend as well. So if you liked it at, $50, you'll love it at 40. And
yeah.
I've got those 35s out there, so it's been dropping pretty hard, but it's still paying what is it paying, an 87-cent dividend on that?
ExxonMobil has an interest. We talked about this, that they have a lot of pressure to keep um, their dividend because they have this insane track record. Like right here, Kraft Heinz has paid dividend growth for 5 years or whatever they've said. Sorry. If we go ExxonMobil, it's going to have this 7% ridiculous, insane dividend right now. I mean, what's not to like about that dividend? Now, that what's funny is that, but they have this that they want to keep going.
Yep.
So, they're going to have to sell some stuff, or, they might even have to borrow. One way to do this, they might issue bonds to pay out their dividend. That's not a good idea, to go in debt to pay your stuff. But so this is a little concerning right here. But look at that dividend, man, 7%. And again, if you look at this from a Buffett standpoint, you'd say, well, is ExxonMobil going out of business in 10 years? And the answer is no, they're not. Not likely to. Very unlikely to. So bargains everywhere. Bargains everywhere. The thing that Berkshire Hathaway's done that's pretty smart is they've found the power of having a little bit in cash to be to their benefit, because when things get really nasty like this, that's when they can swoop in and add to their positions in a leveraged way. For example, one of the best trades Warren made was on Bank of America. When they got in trouble, he went out and bought a bunch of their preferred stock, but he made him give them warrants that allowed him convert it to common shares when the dividend got sweet. And that's exactly what he did. And it's one of the best moves he and Munger have made, because they had a little cash on the sideline to swoop in times like this. And so I'm excited to spend a little money on stocks over the summer, as this stuff shakes down, and look at these prices. So it'll be fun. And then once I get them, just like KHC, once you get them, let's get this to something reasonable. Once you get it picked up down here low, well, if it falls further, defend it with puts, but keep your company. Defend it with puts.
Hmm.
If you're freaked out about that sort of
Well,
thing.
or if you're worried about the volatility, making the puts expensive, put debit spreads are another really great way
Yeah.
to reduce your risk to the downside. What that means is you buy a long put and then you sell a further out of the money put to reduce your
Yep.
cost, and it neutralizes your volatility exposure a bit.
Yeah, it does. So it's nice. The
And
reason the debit spread is nice is if the volatility happens, you've got a long put down there, and if it doesn't happen, you're collecting premium. So I like the
yeah,
debit spread. So
well, that and collaring is always a good thing to do on those things, the things you own, the stocks you own. So
So, no reason to panic if you've got, I guess the final thing I'd say is the options are nice because they give you guaranteed places to sell. And in environments like this, being able to buy an option helps you sleep at night. I've got a personal position in Exxon Mobil right now, and I've got it delta hedged to where I can really sleep at night. I knew that this oil thing with Russia was possible, so I went and bought a few puts and took my delta to neutral and just kind of relaxed and looked at my risk graph and said, okay, great. We're going to make some money on the time decay and just let the delta kind of be neutral on that for a while. So kind of nice.
Yep.
All right, buddy. Well, great minute
Well, you
club.
said I definitely think we need to give your voice a rest. So
Yeah, I'm sorry for coughing and everyone's there. I took last week off. I had influenza A. Went on a flight to Florida to do a little speech, caught a little bug when I got home and went into the doctor and they ran the little test. They go, well, you got influenza A, and my poor son got it. And we've just been coughing and fighting it. I even got a flu shot this year. I don't always get a flu shot. I get busy, but I even got a flu shot. So much for that. But they said, well, it would have been worse. Yeah, I guess you can always say that, can't you?
yeah.
They go, well, if you wouldn't have got it, you probably feel worse than you do now. I go, well, that's hard to imagine, but I'll trust you. Got to go with the numbers. So there you go. All right, sir. Thank you so much.
Well,
Appreciate
thank you.
appreciate the good minute clubbing and nothing to panic about. Put in your stops, put in your collars, use your options, and you know enjoy. Enjoy this market and look for some bargains maybe for yourself. Because there's certainly going to be a bunch of things that might be on sale relative to where they were a year ago. So we'll see.
We'll
Okay.
see.
Thank you, sir.